Reading Theory Chapter 12, Reports, Other Assurance and Related Services. Engagement to review financial statements. The objective to a review of financial statements is to enable an auditor to state whether, on the basis of procedures which do not provide all the evidence that would be required in an audit, anything has come to the auditor's attention that causes the auditor to believe that the financial statements are not prepared in all material respects in accordance with Philippine financial reporting standards. Negative assurance. For the purpose of expressing negative assurance in a review report, the auditor should obtain sufficient appropriate audit evidence, primarily through inquiry and analytical procedures, to be able to draw conclusions. A review engagement provides a moderate level of assurance that the information subject to review is free of material misstatement. This is expressed in the form of negative assurance. In planning of a review of financial statements, the auditor should obtain or update the knowledge of the business, including consideration of entity's organization, accounting system, operating characteristics, and nature of its asset, liabilities, revenues, and expenses. Procedures for the review of financial statements will ordinarily include obtaining an understanding of the entity's business and industry in which it operates, inquiries concerning the entity's accounting principles and practices, procedures for recording, classifying, and summarizing transactions and accumulating information for disclosures, actions taken at meetings of stockholders and board of directors and committees. Analytical procedures designed to identify relationships and individual items that appear unusual. Example, comparison of the financial statements with those from prior periods. Comparison of the statements with anticipated results, such as previously prepared budgets and forecasts. Study of the relationships of the elements of the financial statements that are expected to form a predictable pattern. Reading the financial statements to consider, on the basis of information coming on the auditor's attention, whether the financial statements appear to conform with the basis of accounting indicated. Obtaining reports from other auditors, if any, and if considered necessary, who have been engagement to audit or review the financial statements of components of the entity. Inquiries of persons having responsibility for financial and accounting matters concerning, for example, whether all transactions have been recorded, whether the financial statements have been prepared in accordance with the basis of accounting indicated, changes in entities' business activities and accounting principles and practices, matters as to which questions have arisen in the course of applying the foregoing procedures, obtaining written responsibilities from management when considering appropriate. If the auditor has reasons to believe that the information subject to review may be materially misstated, the auditor should carry out additional, more extensive procedure as necessary to be able to express negative assurance or to confirm that the modified report is required. Example of an unqualified review report. Unqualified review report. Based on a review, nothing has come to our attention that causes us to believe that the accompanying financial statements are not presented fairly in all material respects in accordance with the Philippine financial statement. Engagement on agreed upon procedures. PSRS 400. An engagement to perform agreed upon procedures may involve the auditor in performing certain procedures concerning individual items of financial data, for example, account payable, accounts receivable, purchases from other related parties, and sales and profit of segment of an entity. A financial statement, for example, a balance sheet, a complete set of financial statements. The objective of an agreed upon procedures engagement is for the auditor to carry out procedures of an audit nature to which the auditor and the entity and any appropriate third parties have agreed, and to report on factual findings. As the auditor simply provides a report on factual findings of agreed upon procedures, no assurance is expressed. Users of the report assess themselves to the procedures and findings reported by the auditor and draw their own conclusion from the auditor's work. The report is restricted to those parties that have agreed to the procedures to be performed, since others, unaware of the reasons of the procedures, may misinterpret the result. Independence is not requirement for an agreed upon procedures engagement. Reporting. The report on an agreed upon procedures engagement needs to be described the purpose and the agreed upon procedures of the engagement in sufficient detail to enable the reader to understand the nature and extent of the work performed. It's number 6, right? Right. Okay. 7. The report of factual findings should contain title, addressee, identification of specific financial or non-financial information to which agreed upon procedures have been applied, a statement that the procedures performed were those agreed upon with the recipient, a statement that engagement was performed in accordance with Philippine standards on related services applicable to agreed upon procedures engagements, a statement that the auditor is not independent of the entity if such is the case, as identification of the purpose for which agreed upon procedures were performed, a listing of specific procedures performed, a description of the auditor's factual findings including sufficient details of errors and exceptions found, a statement that the procedures performed do not constitute either an audit or review, as such, no assurance is expressed. A statement that had the auditor's performance additional procedures in audit or review, other matters might have come to light that would have been reported. A statement that the report is restricted to those parties and have agreed to the procedures to be performed. A statement that the report relates only to the elements, accounts, items, and financial and non-financial information specified, and it does not extend to the entity's financial statements taken as a whole. Date of the report, auditor's address, and auditor's signature. Engagement to compile financial information. PSRS 4410. A compilation engagement would ordinarily include the preparation of financial statements, which may or may not be a complete set of financial statements, but also include the collection, classification, and summarization of other financial information. The objective of a compilation engagement is for accountants to use accounting expertise as opposed to auditing expertise to collect, classify, summarize financial information. The procedures employed are not designed and do not enable the accountant to express any assurance on the financial information. Independence is not a requirement for a compilation engagement. However, where the accountant is not independent, a statement to that effect would be made in accountant's report. The accountant should obtain a general knowledge of the business and operations of the entity and should be familiar with the accounting principles and practices of the industry in which the entity operates, with the form of content of the financial information that is appropriate in the circumstances. The accountant is not ordinarily required to make any inquiries of management to assess the reliability and completeness of the information provided, assess internal controls, verify any matters, and verify any explanation. If the accountant becomes aware that the information supplied by management is incorrect, incomplete, or otherwise unsatisfactory, the accountant should consider performing the above procedures and request management to provide additional information. If management refuses to provide additional information, the accountant should withdraw from engagement, informing the entity of the reasons for the withdrawal. The accountant should read the compiled information and consider whether it appears to be appropriate in form and free from obvious material misstatements. The accountant should obtain an acknowledgement from management of its responsibility for the appropriate presentation of financial information and of its approval of the financial information. The financial information compiled by the accountant should contain a reference such as unaudited, compiled without an audit or review, or refer to the compilation report on each page of the financial information or in the front of the complete set of financial statements. The examination of prospective financial information, PSAE 3400. Prospective financial information means financial information based on assumptions about events that may occur in the future and possible action by the entity. It can be in the form of forecast, projection, or a combination of both. For example, a 1-year forecast plus a 5-year projection. A forecast means prospective financial information prepared on the basis of assumptions as to future events which management expects to take place and action management expects to take as of the date of information is prepared. Best estimate assumption. A projection means prospective financial information prepared as the basis of hypothetical assumptions about future events and management actions which are not necessarily expected to take place, such as when some entities are in a startup phase or are considering a major change in the nature of operations. A mixture of best estimate and hypothetical assumptions. That is the projection. Prospective financial information can include financial statements or one or more elements of financial statements and may be prepared as an internal management tool, for example, to assist in evaluating a possible capital investment or for distribution of third parties. Management is responsible for the preparation and presentation of the prospective financial information, including the identification and disclosure of the assumptions on which it is based. In an engagement to examine prospective financial information, the auditor should obtain sufficient appropriate evidence as to whether management's best estimate assumption on which the prospective financial information is based are not unreasonable, and in the case of hypothetical assumptions, such assumptions are consistent with the purpose of the information. The prospective financial information is properly presented and all material assumptions are adequately disclosed, including the clear indication as to whether they are best estimate assumptions or hypothetical assumptions. The prospective financial information is prepared on a consistent basis with historical financial statements using appropriate accounting principles. The auditor should not express any opinion as to whether the results shown in the prospective financial information will be achieved. When reporting on the reasonableness of management's assumption, the auditor provides only a moderate level of assurance. The auditor should not accept or should withdraw from the engagement when the assumptions are clearly unrealistic or when the auditor believes that the prospective financial information will be inappropriate for its intended use. The auditor should obtain written representation from management regarding the intended use of prospective financial information, the completeness of its significant management assumptions, and management's acceptance of its responsibility for prospective financial information. Example of an unmodified report on a forecast. We have examined the forecast, included the name in accordance with Philippine Standard of Assurance Engagement, applicable to the examination of prospective financial information. Management is responsible for forecast, including assumption. Based on our examination of the evidence supporting the assumption, nothing has come to our attention which causes us to believe that these assumptions do not provide a reasonable basis of the forecast. Further, in our opinion, the forecast is properly prepared on the basis of assumptions and is presented in accordance with Philippine financial reporting standards. Actual results are likely to be different from the forecast since anticipated events frequently do not occur as expected and variation may be example of an unmodified report of a projection. That is the forecast. Forecast actual results are likely to be different from the forecast since anticipated events frequently do not occur as expected and variation may be material. Example of an unmodified projection. Even if events anticipated under the hypothetical assumptions described above occur, actual results are still likely to be different from the projection since other anticipated events frequently do not expect in the variation of the material. When auditor believes that the presentation and disclosure of this prospective information is not adequate, the auditor should express a qualified or adverse opinion or withdraw from the engagement as appropriate. When the auditor believes that one or more significant assumptions do not provide a reasonable basis of prospective financial information, the auditor should either express an adverse opinion or withdraw from engagement as appropriate. When examination is affected by conditions that preclude application of one or more procedures considered necessary in circumstances, the auditor should either withdraw from engagement or disclaim the opinion, describe the scope limitations in the report or prospective financial information.